Trading gold isn't hard. Most traders overcomplicate it just so they can feel a little bit more intelligent than they really are. I only trade one candle for 5 to 10 minutes a day with a simple set of mechanical rules. In fact, for this month of December, we are closing out the year strong with over a 10K month with only a 44% win rate. And this is the same exact one candle strategy you guys are going to learn in this video. So obviously we're going to need to let the daily candle close, which on gold is going to be at 6 p.m. And once the daily candle has closed, all you have to do is simply outline the candle from high to low with the Fibonacci tool. And the key levels we're going to be using in this video is going to be the 1 level for the daily high, the 0.9 for the stop loss, followed by a 1.25 for your take profit. This is going to be the case of buys. And as you can see the long position on screen, this is exactly what the position will look like with a take profit of 2.5R, followed by sells, which includes the 0 level for your entry, followed by the 0.1 for your stop loss, and a negative 0.25 target for your take profit. And as far as a short position, that is going to look like this with your stop loss at this red line here, and a take profit of negative 2.5, which again is going to be a 2.5R take profit. And of course, if the buy side is hit first, we are canceling the sell order. And if the sell side is hit first, we are canceling the buy order. So we're only looking to take advantage of whichever side gets grabbed first. Now, before we dive into the live examples, it's important to note that we must avoid any entries from the hours of 12 p.m. to 6 p.m. From the hours of 12 p.m. to 6 p.m. is going to be the dead half of New York, followed by Sydney session. So we're going to be avoiding these hours to be able to catch the Asian Open all the way to the New York kill zone. And that is where this strategy performs best. Now that we have an understanding of how this simple system works, we're going to dive into some live examples. So we're already on the daily time frame. So all we need to do is outline the current day's candle from high to low. And we'll go ahead and drop down to, let's say, the 30-minute time frame, just so we can observe price action relative to our entries. Go ahead and let this range close out. Wonderful. And I'll make sure this fib is adjusted to par from high to low. And what I've done here is set up an indicator that shows price action within the previous day's candle, followed by the next day candle data. So we can view everything without having to switch back and forth between the daily and the lower time frames. So if you guys want that, I'll pin that in the comments. And as well, if you guys want access to this system and a few other profitable one candle strategies, the link is in the description. It's absolutely free. But without further ado, let's go ahead and dive into the live examples. So first things first, we've already outlined the high and the low. So all we have to do is let price play out. And of course, I've already set up the hours we want to avoid in red here. So if we get any entries within this red box here, that is going to be a no trade scenario. Okay, we have our first entry here. So we'll go ahead and place the long position entry there, stop loss at this red line, followed by this blue line here for a profit of 2.5R. And as you guys can see, we hit take profit beautifully. So that is going to be the first winner. And again, always on the lower time frame. Always make sure upon entry that there's no stop out of price. Of course, in this frame here, we can see it was a clean entry with no reversals. So this is a valid win. And we'll go ahead and get rid of this on screen and come to our trade journal here and document a plus 2.5RR. And we'll let this day close out. So now that this range has officially closed out, we'll go ahead and adjust the fib from high to low. There was no entry for this day's price action, which is no worries. We'll continue just following the ranges from high to low. And of course, on the higher time frames, it is simply just going to be the daily candles. Now that we have our range from high to low, we'll simply let this next day's range play out. Okay, we have an entry there at the low, so let's go ahead and dive a little deeper here. As you can see, we got tapped in at the low and instantly stopped out. So that is going to be a -1 for this scenario here. I don't even need to place a short position. You guys can already see that. It grabbed the low and instantly hit this 0.1 level. So we'll come back to our trade journal and document a -1RR. Okay, and now that we have our next range, we'll outline it from high to low. Okay, as you guys can see, we have an entry into this 1 level, aka the daily high. So we'll place our long position as such, stop loss at the low, followed by the take profit there. And price went ahead and stopped out the position, so that is going to be another -1 in the books. So we'll document on our journal a -1RR, and we'll let this range close out. Okay, now that this range is closed out, again, we'll simply just follow the highs and lows. And it is really that simple. That is all we're doing, combined with these fib levels and simply placing our orders and walking away for the day. And now that we have our range outlined here, we'll go ahead and let price play out. Okay, and as you guys can see, price shot up right into the daily high and to our take profit, which is pretty typical of gold, as it loves to target liquidity on both the buy and sell side, which in this case we're denoting to the daily highs and lows, which 9 times out of 10 gold is going to run either the high or low within the next day. So that is what we're taking advantage of, the high liquidity in gold. But let's go ahead and confirm that this trade was actually not a stop out. And as you can see on the 5-minute time frame, there's a clean entry into this one level, no signs of pullback stopping us out. So that is going to be another plus 2.5. I don't even need to place the trade. You guys can already see it with the fib levels. We'll go ahead and document the plus 2.5 RR on screen, and we'll go ahead and showcase another example or two for you guys today in this video. Okay, so our range is closed out from high to low. Okay, no entry there at the low. We came very close but did not tap us in. Okay, we have officially entered our no trade hours. So at this point in the day, it is going to be a no trade scenario for this day's range. No worries at all. We'll simply wait for the next day's range and place our orders. Outline from high to low. Okay, and as you guys can see, we breached the high very beautifully. So we'll go ahead and place our long position there. Stop loss at the red line, aka the 0.9, entry at the open, followed by take profit at the 1.25 level for another 2.5 R. And as you can see, we're exited at take profit for another winning position. A beautiful example of this setup here. So we'll come back to our trade journal and document another plus 2.5 RR, and we'll go ahead and wrap it up there for the examples. As you guys can see, we had 3 winners and 2 losers, which is about a 60% win rate. This sample size here of 5 trades has overperformed the true win rate, which is about 42%. And if we even come to our data sheet here, I'll go ahead and prove it to you guys, and we'll go ahead and input 2.5 R, which results to about 243 trades divided by the total is about a 42% win rate. And even if we come to our dashboard here, we can see for the month of December, we performed at about a 44% win rate, which is slightly above the true win rate, which is very typical of these mechanical strategies. At times it'll perform right at the true win rate. Oftentimes it'll perform way above the true win rate. And there are even times when it is performing under the true win rate. And that is why you must dial in your risk management. As you can see, I have a 100K account and I'm only risking about 1K a trade, as I understand that there are drawdown periods with any strategy. So I want to make sure my risk management is dialed. But that about wraps it up for today's video. If you guys have any questions, comment down below. I'll try my best to get back to you. Again, if you guys already haven't grabbed my free 1 candle playbook, link is in the description. I will see you guys in the next video.